Hey everyone, I hope you guys are doing well. I wanted to bring you a video on how you can get pre-approved for a mortgage home loan via Navy Federal. Now, if you are new to my channel, I bring you information no matter where you are on your credit journey to help you improve your credit score and maintain your credit score. On this channel, we dedicated to credit education. I am not credit repair. So if you like this kind of information, make sure you subscribe to the channel. Also, be aware of scammers in the comment section. There are scammers using my photo. So if I reply to your question, click on the photo to make sure the subscriber base on this channel matches the person that is responding to you. If you have any questions, you can always contact me at my website where all your questions go directly to my cell phone. So let's just jump into this video. Now, with Navy Federal, it is the largest credit union in the United States, and it was designed to help members of the armed forces and their families. So, with Navy Federal, in order to be a member, you have to be connected to the U.S. military and their branches. So, even contractors of the U.S. military, some of them, or if you work for a company connected to that, can even qualify to become a member. If you are a veteran, you can become a member, or if you are related to any of these people, you can become a member. So with Navy Federal, I do have a video on also backdoor options that you can come in for a membership with Navy Federal. I will leave that video in the link in the description of this video if you want to check that out. So in order to get pre-qualified, you will have to be a member of Navy Federal. So why would you want to come to Navy Federal to get a mortgage and to get pre-approved? Because Navy Federal do offer some very good options for home loans. There are home loans designed in different categories depending on who you are, where you qualify for. Now, currently, home interest rates are going up because of the federal government or the federal bank and the Fed, who control our money supply, has increased interest rates. So when they increase interest rates, commercial banks borrow money from them. And if they're getting it at a higher cost, unfortunately, you're going to get loaned to for a home at a higher interest rate than what they are receiving the money for and the interest they have to pay back. So it is expected that the Fed may increase interest rates further because we have high inflation. So if you are a person who is really looking forward to trying to purchase a home, you need to examine your situation and shop and look around for home mortgage rates and your options. And Navy Federal have some options here. If you are a veteran and you want or you qualify for a VA loan, they have interest rates as low as 4.375%. Also, they have the option for zero down payment with terms from 10 to 30 years. Also, if people are already active in the military, veteran loans are only for those who served in the military and had certain requirements as honorable discharge. So if you are an active service member, you wouldn't qualify for VA loan. So they have an option for the military choice for those who are already active. And for some veterans who already exhausted their VA benefit, they can also go for this loan. So meaning if a veteran already have a home loan somewhere else for another home and they already use their VA loan, or it is currently being used for a mortgage, you can go with this option of this military choice, and that is a interest rate as low as 6.375%. And this also offer a zero down payment, and terms for this one is 16 years to 30 years. They also have, for those who are not necessarily vets or connected to the military by being active, your relative, or you are a person that is a contractor, they have conventional fixed rate options for you, which is a great choice. What they're saying for home buyers with stable monthly mortgage payments, if you're interested in that, and your interest rate can be as low as 4.625% with only 5% down. Now, the terms is from 10 to 30 years for that conventional mortgage rate. Also, they have home buyer's choice. Now, with this option, there is no down payment requirement. Now, you will have to qualify for that zero down payment. And if you are qualified for this option, you're looking at 6.500% as an interest rate for a home loan with zero money down. You don't have to put any money down, from 10 to 30 years as a fixed rate mortgage. Now, they do have adjustable rate mortgages. Anybody who is inexperienced with mortgages, I would be very careful. And with adjustable rate mortgages, you want to make sure that you understand your adjustable rate mortgage. Now, I am not a financial advisor and I'm not giving you legal advice, but in the 2008 crash, a lot of people took adjustable rate mortgages and didn't completely understand. With the adjustable rate mortgage, it can, depending on different index factors, go up and down, and is not a consistent mortgage payment through the terms of the loan. So from 10 to 30 years, your rate can go up or it may go down. So you want to really examine this, but they have adjustable rate mortgages at 4%. So you want to make sure, like I said, you understand this type of mortgage and it is for you. And this is zero down. That is possible with this adjustable rate mortgage, all the way up to 10% down. Now, why would you want to pre-approve for a mortgage? And with the mortgage pre-approval process, many a times, if you are not pre-approved or pre-qualified for a mortgage, many, or you may have some realtors who will not want to really work with you because they don't want to waste their time driving around looking at homes that you're not able to buy because of your income. So with being pre-approved, if you find a home, you know what you can afford preliminarily. And what Navy Fed will do is give you a letter showing that you're pre-approved for an amount that you can possibly afford for a mortgage. And so you know how much that you can look for a home that you are looking to buy. Now, with mortgage pre-approval, if you locate a home and you want to put an offer on that home, many homeowners will not consider your offer as being serious if you don't have a pre-approval. They want to see that you're already pre-qualified with the bank and that you will be able to afford a mortgage or to be able to purchase this home before they tie up an agreement and tie up the property under contract with you. So this is a very important part of the home buying process, is for you to get a pre-approval. Now with Navy Federal, they're telling you in this overview of a pre-approval, it's really showing how much that you're eligible to borrow for a home. And all of that will take in consideration off of your credit score, income, your assets, your debts, your employment history, and other financial information. So when you are going for a pre-approval, they're going to want to see some documentation, especially on your income, and they want to know about your current debt obligations. So if you are a person that have a current car note, that can actually reduce what you can qualify for in a home loan, or how much you can afford, because you have a payment that is due every month for that loan. And therefore, they're going to add that expense and deduct it out of your income. And then what you are left with, your disposable income after your debts, that's how they're going to come up with the calculation of what you can afford. Now, if you have other means of income, like, alimony payments, or if you have other investments, say rental properties, all of this will be taken into consideration. And they even generally have different rules for people who are self-employed. You will have to present this type of documentation that they were asked for you for this pre-approval. Now, when you are going for mortgage pre-approvals, is usually the letter is good for at least 30 days and as long as 90 days. So why that is important, because when it comes down to applying for a mortgage, unlike credit cards, most credit card companies just pull from one credit bureau, like either Experian, TransUnion, or Equifax. But when you're going for a mortgage, they're going to pull all three credit scores. So when that happens, it will cause a hard inquiry pull. And you want to be careful that you have your ducks in a row, and you want to be able to move quickly on your pre-approval, because after 90 days or sometimes 60 days, they might want to pull your credit again. Okay, so you want to make sure that with the home buying process, if you're interested, you just don't want to be tire kicking if you're trying to get a pre-approval, because the more times they have to run your credit, it can decrease your credit score. But the pre-approval process is generally always required when you're going to purchase a home, because if you're going to work with a realtor, they want to see you qualified, you're not wasting their time. And if you're trying to purchase from a homeowner, they don't want to pull their house off the market for someone who couldn't afford to buy the home in the first place. So with Navy Federal, here's some things that you need to know if you're trying to get approved. What is impacting your pre-approval? And like I said, debt to your income, how much debt and how much income you're making, your credit history and your credit score, verification of income, income and assets. Those things will matter. Now, what you want to expect from them, it depends on your eligibility, that you could be approved very quickly, in some cases instantly. So that will work in your favor. And like I already mentioned, and like they're mentioning, your real estate agent typically want to see a pre-approval letter before they take you around looking at houses. And once you provide a property address, your pre-approval will convert into an application for a loan. So with a pre-approval, right? When I had my pre-approval, I first was looking for a single family home, but looking at my income when I bought my first home, I realized I'm better to buy a multi-family property, because if you are looking for a single family home, you're going to qualify for less than if you are a person that's buying a multifamily home and you're going to live there. You can qualify for more because the units or the unit that you're going to rent out is going to generate you income. So when they're saying with the address, sometimes people change their minds, and you got the initial pre-approval letter, and you may not want, or you might have a property in mind that you want to buy, but that gets taken up before you even have an opportunity to put a bid in. So you might have to have another address that you're going for offer. So when you change your mind, if something happened, once they give them the address that you're secure on, they will start doing the full out application for your mortgage loan. Now, when you're going through that mortgage process, that pre-approval doesn't guarantee you that you're going to get that mortgage loan. Anybody that told you about purchasing a home, it is very stringent on some of the requirements and some of the questions they're going to ask you about. They're very thorough. So you want to make sure you have your ducks in a row, especially with credit. You don't want collections, any outstanding charge-offs. You want to make sure all those debts that you have, that it is resolved. Because many times, if you are pre-approved and they pull your credit and you have those negative items, they may say you have enough income, but these negative items must be removed before you close on the property. You have to pay them off. So if you need help with that, I have packages for DIY credit repair at my website that you can send those letters out yourself. But when it comes down to that, the bank wants you to resolve those issues, because if you purchase that home, they give you the deed to that home. These debtors can come after you and put a lien on that property. So the mortgage company want to make sure if they ever have to take that property, that there's no liens and nobody else that they have to pay off for debts. They can take that home back. So it is going to be very important before you go through this process. I always suggest to people, make sure your credit is in order. Now, if you're self-employed, they will have additional requirements. Many companies want to make sure that if you are self-employed, they want to see 2 years that that company's been in business. They want to see your tax returns, and they may ask for profit and loss forms and more documentation. So with Navy Federal, when they're saying that you need to plan ahead, make sure if you are employed, you have your W-2 forms, pay stubs, and it's your W-2s from the past 2 years, your pay stubs, personal tax returns for the past 2 years, and your monthly debt and living expenses. So you're going to have to present that. Now, when you want to go to get pre-approved and go through the pre-approval process, you would hit this get pre-approved. And what's going to happen, it's going to take you to the screen to log in to your account, your Navy Federal banking checking account. And from there, when you put in that information, your login information and your passcode, it's going to start that application for you so you can go through the process. They're already going to have preliminary information for your address. And so you can start to begin this pre-approval process, because either way, you're going to need it in order to look for a home. Now, I suggest if you are getting ready to look for a home, always make sure that your credit is in order. You want to be ready to go, because it is a very stressful process. And I have bought 2 homes. It's a very stressful process going through the mortgage loan approval. You don't want to waste time, being that you have 90 days, you have to close. You don't want to keep having them to pull your credit. And once you even locate a home that you're interested in, there are processes with that. You have to have bank appraisals done. You have to get home inspections. There might be repairs or other things that you need to do in order to close on that property. So you want to make sure that it is efficient enough as possible for you, so you don't keep pulling your credit and added up inquiries and decreasing your credit score. Because the lower your credit score, many a times, if you even qualify anymore, if your credit score drop, the higher your interest rate will go. So hopefully this is helpful for you guys. If you have any questions, make sure that you reach me at my website, or if you have general questions, just leave your comments in the comment section. And I hope to see you guys in the next video. Stay tuned.